This is CGTN, China Global Television Network.
This is Global Business. Hello and a warm welcome wherever you're tuning in from. I am Peninah Karibe. Pleasure to have you with us. Let's begin with a look at the markets. The JSE closed higher today as U.S. markets cheered Federal Reserve Chair Jerome Powell's indication that the U.S. will likely loosen monetary policy soon. Shortly before the JSE closed, the Reserve Bank announced the reappointment of its governor, Leseja Kanyago, for another 5-year term. His current term is due to end on November 8th. The bank also appointed Monetary Policy Committee members Nomfundo Shazibana and Rashad Kasim as deputy governors. Coming up on the show tonight, Zimbabwe's public workers are up in arms over $21 million worth of additional pay for the rest of the year. The Federal Reserve signals that it may cut U.S. interest rates. And the Cape Town International Airport scores yet another award. Public sector workers in Zimbabwe have rejected the government's offer of $21 million in added pay for the July to December period. The amount, which was to be shared by 309,000 civil servants, would see each worker receiving an additional $11.28 a month. The state's public sector union says that amount is inadequate in the face of the country's soaring inflation. The Southern African economy is currently grappling with a severe shortage of fuel, bread, medicines, and 17-hour daily power cuts. On top of that, the currency reforms it introduced last month to ban the use of foreign currencies are doing little to instill confidence that the living standards of Zimbabweans will improve soon. Let's get more now from Farai Mokutuya, who's live for us in Harare. Farai, the public sector workers rejected that government offer of $21 million. What reasons did they give?
Well, Peninah, obviously, principally the fact that it falls far short of the sort of amounts that they're looking at. As you said there, this translates to about between 10 and 11 US dollars per person per month. That's about 97 Zimbabwe dollars, that the increment that has been presented or offered by government civil servants, saying that is nowhere near the amount of money that they're looking at. When I spoke to teachers earlier, they are saying, look, the cost of living has gone up significantly since the last increment, and the figure that they're looking at is at least 4,000 Zimbabwe dollars per person as the lowest paid salary. So that's about 10 times more than what the current lowest paid employee is getting. And this figure that they have been offered is nowhere near that. Just to give you a sort of indication of what 97 Zimbabwe dollars, the amount that has been offered, what it can get you, that is about transport to and from work for a civil servant for a month. So that is the sort of amount that they have been offered. A more agreeable figure, acceptable figure will be put on the table.
So what happens now, Farai? Is the government
rejected that offer? The representatives on the government side said that they would go and report back to their principals in terms of the feedback that they had received, and another meeting will be held during the course of this week. That meeting might be to come up with an improved offer, certainly offer government workers a bit closer to what they're looking at. But, you know, when I spoke to some of the civil servants today about the outcome of that meeting yesterday, they're not very hopeful that the figure that they want will be matched, because there's such a huge disparity, a huge gap between what they're demanding and what is already on the table. So they're quite bleak in terms of what they'll get out of this. However, the negotiating process does continue, and we understand that talks will happen between tomorrow and Friday, and hopefully we'll get some further update in terms of what the position is. If not, we're likely to see, if a low figure is offered now, we're likely to see another round of negotiations and a need to offer another increment before the end of the year because of that rising cost of living that you spoke about. Inflation now officially close to 100%. So clearly, the cost of living is going up, and there is need for that adjustment.
All right, so moving away from that issue, Farai, the finance minister announced that the National Treasury carried out its first public auction of treasury bills yesterday since 2008, and he says that was to test market appetite for those bills. How was the response to that auction?
Well, I think the response was pretty subdued and cautious from the market. We understand that about 5 banks submitted bids for those treasury bills, and the amounts that had been tendered, the amount that was raised was about $20 million. So a very cautious start to this, and I think it's because of the history that Zimbabwe's had with these treasury bills, because in the past they have been misused to create money, to print money, and that has also had inflationary pressure, but also government has used it as an avenue to borrow money from the market, and that has had an impact on its fiscal deficit and its position. And so going into this, people are still anxiously watching to see, a bit apprehensive to see if government has the discipline in order to run this treasury bill system the way it ought to, without inflicting pain in terms of inflation and also on government borrowing. The Secretary for Finance has said that government is disciplined, it is running surpluses, and so doesn't need to borrow, and so there's no need to worry. He's allayed those fears that people have, but this is very early days, the first day, very subdued at this point in time, but hopefully as confidence is gained and this gathers momentum, we'll start to see more participation from the banks and higher bids being put on the table.
Indeed, Farai, thank you for that update. Farai Mokutuya live in Harare. Let's move on to Egypt. The Central Bank's Monetary Policy Committee is meeting on Thursday to determine the interest rates for the next 2 months. Rates stand at 15.7% for deposits and 16.7% for lending. CGTN's Yasser Hakim looks at whether the Central Bank will cut interest rates this week.
This is the 4th session in 2019. The central bank has kept rates as it is in the last 2 sessions, owing to strong demand on Egyptian bonds from foreign investors.
The economic reforms by the government lately led to the increase of capital inflow and reduction of the budget deficit. This is why the central bank wanted to avoid any disturbance by keeping interest at the 15.75% rate, hoping for similar growth.
Since the last central bank's monetary policy session, the prices of energy have increased due to cuts in energy subsidies, and this has caused an inflationary effect on the markets. Therefore, most experts believe the central bank will not move interest rates this time around.
CAPMAS announced a drop of 4% in June's inflation rates, which is good. However, the increase in fuel prices and linking it to the international prices, in addition to the high electricity prices, it all raised transportation costs and prices of other goods. To keep the economy balanced in front of unexpected inflation starting end of July, the central bank will prefer not to cut interest rates now, maybe in the near future, but not now.
A minority expect rates to be cut by 1 percentage point. They say the investment sector needs a boost. It has witnessed a slowdown in the last 2 years because of the high interest rates. Most experts predict that the central bank will begin slashing interest rates by the 4th quarter of 2019. Good performance by the Egyptian pound and an emerging market that is attractive for investors will likely encourage the central bank to keep interest rates as it is for now. Yas Hakim for CGTN, Cairo.
Your corporate news now. The International Air Transport Association says Zimbabwe owes airlines about $196 million. Foreign airlines flying into the cash-strapped country have not been able to repatriate their revenues. This is due to a major US dollar shortage as well as currency instability that continue to grapple the country. Tanzania's largest gold miner, Acacia Mining, says it's worth a lot more than the takeover drafted by its top shareholder, Barrick Gold. According to a report by the firm's consultant, Acacia is worth 271 pence per share under a preferred value scenario. That's 38% more than Barrick's informal proposal to buy the company in an all-stock transaction. Shares of Airtel Africa have plunged by 10% a day after its cross-border secondary listing on the Nigerian bourse. The group hit a low of about 359 naira against an initial public offering price of 363 naira. This latest slump mirrors a similar decline on the London stock market, where the telecoms firm has its primary listing. And Egypt's leading electronic payments firm, Fori, is preparing for a share offering on the country's stock exchange. The company is reportedly planning to list 45% of its shares in the coming weeks, eyeing a valuation of between $265 to $330 million. And that's a look at your corporate headlines. You're watching Global Business. Still ahead. We'll be bringing you analysis of Ghana and Cote d'Ivoire's cocoa deal. And we'll show you how Botswana plans to diversify its economy.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head out now.
Beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sudan. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Ghana and Cote d'Ivoire have agreed to legislate the minimum producer price to be paid to its cocoa farmers. The latest move aims to address the high income disparity in the cocoa value chain, as well as safeguard the industry's future. However, cocoa farmers in Ghana say these new measures will scare off international buyers. CGTN's Nabil Ahmed Rufai explains.
Samuel Komlon owns this 4-acre cocoa farm in the eastern region of Ghana. It's been passed on from one generation to the other. Yet, Komlon says, like his late father, he is not raking in much revenue from the sale of the cocoa.
The price is not up to our expectation. So, if you say you buy all the insecticide and all the weedicides and all those things that you need, and the labor too is very costly. So, the little that you get is put into the labor cost. The remainder is very meager.
For many years, buyers of the cash crop have been the ones determining the price. Globally, the chocolate market is worth around $100 billion, of which only $6 billion go to cocoa producers, a situation cocoa farmers like Komlon say has left them impoverished for years. With 65% of global cocoa production between them, Ghana and Cote d'Ivoire want to determine its price on the international market. They say this would help farmers bring home a reliable income for their families. Ghana and Cote d'Ivoire have now pegged the price of cocoa at $2,600 per ton, an increase of $400 on the current price. They have also suspended the sale of cocoa on the international market until the implementation of the new price in the 2020-2021 season.
What we consider the floor price is 2,600. What was agreed or what we understood to be the system of trading going forward is to have what we refer to as the living income differential. The living income differential is $400, which we place on every ton of cocoa.
But Comlon is concerned the price increase will kill off Ghana's cocoa trade, that buyers will refuse the price increase and look elsewhere instead. For now though, he's happy cocoa producers are at least trying their bargaining skills after many years of being at the far end of the negotiating table. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
Anthony Morrison is the CEO of Ghana Chamber of Agriculture Business. He joins us live from Accra, Ghana for a further discussion on this. Thank you, sir, for joining us. So first off, how have stakeholders responded to this $2,600 price floor?
Well, thank you very much, and a very good evening to all your listeners, viewers. I say this is a very good and a welcoming news to most cocoa farmers and peasant farmers in Ghana who are doing 4 acres sort of. There is this excitement among them, and there is also this expectation that the increase in the floor price will have some effects in their pockets.
Right, so we've heard in that report that some farmers are concerned that this hike could kill off Ghana's cocoa trade. What factors influence the decision to settle on that price?
I'm sure this will some way or the other have some little influence or negative on Ghana's cocoa, but I must say that to a large extent we expect to see this on a very rather positive note, because this has been a long-standing challenge. Especially we've spoken about the fact that the world cocoa price or the world cocoa consumers have failed to kind of accord or pay some loyalties to cocoa farmers, especially in depriving communities and countries in Africa, especially where you have Ivory Coast producing about 1.7 million tons, Ghana bringing about almost 1.72 million tons, and also seeing Cameroon and Nigeria. If you go to some of these cocoa producing areas, communities, you see a lot of challenges, economic hardships, and this is a welcoming news in that yes, we need to mitigate the effects of economic situation. We need to increase and bring some social dynamism in the among cocoa farmers. What we are expecting to see in that this will mitigate and bring into life some financial inclusiveness or inclusion of cocoa farmers in these communities, for them to be able to access good health, for them to be able to send their children to school for good education, and for themselves to be able to live a more decent and reasonable lifestyle. We're talking about increasing the standard of living among these farmers across Africa.
Now, given how critical this cocoa industry is to governments of both Ghana and Ivory Coast, there's been concerns that the high taxes by governments could affect the trickle down to these farmers. What assurances are you giving farmers that this is indeed a sustainable plan?
Yes, I'm pretty sure, based on our analysis from the Chamber of Agribusiness Ghana, we've spoken to our agribusiness intelligence and our cocoa specialists and economists, and we thought that yes, this will not in any way affect the current fortune. The farmers will actually have to also lobby for a greater share of this floor price, and it's also a challenge, because farmers themselves do not have a more united front. So there is going to be a lot of lobbying here and there. There will be a lot of murmuring. But at the end of the day, I think that the wishes of the farmers will prevail, because the government of Ghana gains a lot of income from cocoa and revenue, actually. And this revenue goes to cater for a lot of social amenities, roads, and other areas of concern to government. However, we are also of concern as to how this also in general will harness the economy of both countries. You would have expected that in taking this decision, both Ivory Coast and Ghana would have also brought on board the concerns or maybe some support from other two African major producers who are in the top 10, like Cameroon and Nigeria. Don't forget that just a few months ago, Ghana, for instance, have to downgrade its production expected harvest from 999,000 to 850,000 as a result of the challenges with the swollen shoot disease of cocoa. This has also affected Ivory Coast. So you expect, even though both Ivory Coast and Ghana both produces 65% of the world's population, world's cocoa production, you would be concerned also that we needed a greater front with Cameroon and Nigeria. Then in a game, this is the time probably in Africa and Ghana, Ivory Coast, to encourage their nationals, especially in Nigeria and Cameroon, where the population is so high, to start consuming cocoa, because if there is some reprieval attacks on the consumption of cocoa products in the Western world, talking about Europe and America, that will have some effect. The effect will be as a result of the consuming international countries, Europe and America and Asia, actually turning their back. But the point is that for many years, cocoa has never done well in most of the countries that consumes a lot. So yes, we need some mitigating effects. Then on the part of the producing companies that are located in countries like Netherlands, UK, you're talking about Asia, South Korea and Japan, where they have the unique cocoa production. Probably they should start looking at setting up some of their value chains in Africa. This is to support the African economy. We're talking about diversification of cocoa, diversification of the economy. So yes, in a way, I think that is going to be a win-win for both production countries and also the consuming world of cocoa.
All right, let's talk about the issue of child labor. It's quite thorny, and some people have argued that a better paycheck to farmers would go a long way in eradicating this problem. However, question is, just how much higher do farmers' incomes have to go for this problem to go away? And are there any other steps being taken to eradicate this problem?
We're talking about mitigating the economic hardships, and for the human needs. Sometimes you can't always seek to fulfill everything. Yes, we need to support farmers. We need to make sure that a farmer is able to have for himself and their family 3 square meals a day. The farmer is able to have a standard health needs. The farmer is able to have some social mobility and economic mobility, financial inclusion, and also be able to save a decent wage for future emergencies. Then again, also be able to solve the challenge of child labor. You would agree with me that some time ago, Fairtrade have done a very rigorous analysis of some of the problems with regards to child labor. And I'm sure this will go a way. It's a step in the right direction, and this will certainly help to some large extent to take away child labor, because there'll be enough money to send these kids to school.
All right, sir. Thank you very much for your time. We appreciate it. That was Anthony Morrison, the CEO of Ghana Chamber of Agriculture Business, live for us in Accra. Let's head to South Africa now, where the launch of the African Continental Free Trade Area Agreement has been hailed as a potential game changer for the continent. The ability to now trade tariff-free is, for many Western Cape companies, an encouraging sign of the significant benefits associated with being part of the world's single largest market. CGTN's Travis Andrews has this report.
The African Continental Free Trade Area Agreement is considered as an ambitious plan that is meant to drive through greater integration on the continent, not just through goods, but also through people. With a combined population of over 1.2 billion people, many trade experts believe intra-African trade can be significantly boosted from the current level of just 17%.
The basic idea behind this agreement is to boost intra-African trade, because Africans do not really trade that much with each other. The intra-African trade compared to the rest of the world is at very low levels. So we can do a lot if we make it easier to trade. Now, how will we do that? If we can lower the tariffs, if we can make the rules of origin easier, if we can deal with the red tape and the infrastructure and the transport systems. So there's a lot to be done.
And that means major growth is possible for many Western Cape companies, with aspirations of having their products across the continent.
We are very optimistic about the growth opportunity, and we're not, there's a lot of challenges in Africa, but we are not discouraged with regards to those challenges. We go into this market and we really want to penetrate those markets. Our rose juice range is very high in demand across Africa and also now in the Chinese market as well.
What the ratification of the agreement also means is that local businesses may not be beholden to what they perceive as unfair trade practices from some markets they currently operate in. One of the spin-offs of the trade agreement is that it could catapult South Africa's economy to a higher growth trajectory and lift the GDP. And in the Western Cape, that means not only more money for local companies, but more job opportunities for locals as well. Travis Andrews, CGTN, Cape Town.
Elsewhere in South Africa, the government is yet to decide on the future of the troubled state-owned power utility Eskom. The country's main electricity supplier is steeped in $30 billion worth of debt as operational costs soar higher. There is some good news, though. The lights have stayed on despite the change in the weather. Angela Coppola reports.
South Africa has kept the lights on during winter when demand is at its highest. It will not want a repeat of rolling power cuts earlier this year, which could push the economy back into recession. This on the back of a 3.2% contraction in the first quarter of 2019.
There seems to be an appetite by government to provide the necessary short-term funding to ensure that Eskom remains viable. The second element is Eskom improving the operational efficiency. That simply means keeping the lights on. And it seems to us that Eskom has made some progress in being able to improve the way in which the power units are operating.
Eskom is crumbling under a $30 billion mountain of debt and rising costs. An $18 billion government lifeline over the next 10 years may also have to come in sooner than expected. Parliament is considering an appropriation bill to keep Eskom from faltering.
The Minister of Finance would have to tell us where is he going to get that additional money. We don't think it's possible to use the tax revenue to fund that. Already tax revenue is under pressure, and government has obviously allocated the tax revenue to various government departments.
Eskom doesn't need more money. It needs to sort out its costs. It needs to sort out its corruption. If you scrub the debt that stands at about $30 billion, you'll come down to around about $12 billion. And that is more than affordable. So it will take them 2 years, maybe 3 years to pay back the debt.
Government's intention to split the ailing state-owned entity into 3 units has also stalled, with a delay in appointing a restructuring officer.
That person's responsibility would be to come up with a plan on how we're going to unbundle Eskom. At this stage, we still haven't appointed that chief restructuring officer. It would probably take that person 6 months to a year to come up with some sort of plan on how to unbundle Eskom.
There are other alternatives for government. Selling those non-key state assets to strengthen parastatal's balance sheet is one option. South Africa could also turn to the bond markets or the World Bank to come to Eskom's aid. But for now, there's no clarity on the way forward. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Botswana is taking steps to diversify its economy away from the mining sector to elevate the recognition of tourism as a priority growth sector in the country. But there are rising fears that the country's recent decision to lift the hunting suspension could affect the tourism sector in the near future. CGTN's Daniel Arap Moi reports.
Tourism continues to be one of Botswana's fundamental economic sectors, contributing to government revenue and boosting important macro businesses. It is also the second largest foreign income earner after the country's powerful mining sector. According to the 2018 World Travel Council report, Botswana's tourism sector grew by 3.4% last year, contributing a staggering $2.5 billion to Botswana's economy. Botswana's unique natural resources, comprising bountiful wildlife and unspoiled ecosystems, give its tourism industry a significant advantage.
We have some of the animals who've never actually had any interaction with any humans. So they are quite in the wild. So Botswana is one of those places you have pristine wildlife that you can most probably come across, and it has never come across any human or had any human contact.
But Botswana's recent countermeasure to control the country's growing elephant population has continued to generate warnings of a blow to the lucrative tourism business.
It's not like we are totally saying away with the elephants, we're killing them, but it's just a way of reducing the number of elephants that are increasingly growing in our country. But at the same time, as I said, it's a two-way thing. It could have an impact on our tourism if you look at it in the future.
Landlocked Botswana has the largest elephant population in Africa, with an estimated 130,000 roaming freely in its wide open spaces. According to the International Union for Conservation of Nature, there are 415,000 elephants in Africa, with the population having been decimated largely due to poaching for ivory. Daniel Arap Moi, CGTN, Gaborone, Botswana.
And you're watching Global Business. Coming up after the break. The Federal Reserve signals that it may cut U.S. interest rates. And South Korea urges Japan to ease its strict export controls to Seoul.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant.
Only on CGTN.
How will your world change today? What happens here? What happens there? Or what do you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Let's recap some of the day's top stories. We start here in the Kenyan capital, Nairobi, where a regional African high-level conference on counter-terrorism kicked off on Wednesday. Leaders are seeking new ways to combat violent extremism. UN Secretary General Antonio Guterres has urged delegates to look at new ways of sustainable financing of programs to combat radicalization. Somalia's security forces have executed 3 Al-Shabaab fighters captured during a siege on a popular hotel in the capital, Mogadishu, Mogadishu. The Al-Shabaab fighters' trial lasted for more than a year, but on Wednesday, a firing squad in Mogadishu executed the 3 young men after it found them guilty for the deaths of 18 people killed in a complex attack in October 2017. And 4 French anti-tank missiles have been found at a base loyal to Libya's eastern commander, Khalifa Haftar. France denies breaching the arms embargo and says the unusable missiles were never intended to be sold or transferred to any party involved in the Libyan conflict. The US-made Javelin missiles were discovered after anti-Haftar forces overran a camp in the town of Gerian, south of the capital, Tripoli. And that's a look at some of the day's top stories. The head of the U.S. Central Bank, Jerome Powell, says concerns about trade policy and weak global economy continue to weigh on America's economic outlook. The chairman's latest remarks solidify the widely held expectation that the U.S. Central Bank will cut interest rates at its next meeting on July 31st. Fed has kept its current benchmark overnight interest rate in a range of between 2.25% and 2.50% since December, facing the wrath of bashes from U.S. President Donald Trump. American stock index futures gained, turning positive for the day following Powell's comments. At the same time, government bond yields dipped, with 2-year treasuries falling below 1.87%. To the latest on the escalating trade spat between Seoul and Tokyo, the South Korean president says Japan is wrong to use Seoul's sanctions on its northern neighbor, the DPRK, to justify its stricter controls on exports to South Korea. In a meeting with business leaders, Moon Jae-in said he was committed to finding a diplomatic solution and urged Japan to be more open-minded. Our reporter Jack Barton has more from Seoul.
President Moon Jae-in meeting with the heads of South Korea's biggest conglomerates and business associations. The meeting followed Japan's surprise move last week when it slapped export restrictions on 3 products critical for manufacturing semiconductors and displays, the backbone of South Korean exports.
We can't rule out the possibility that the situation will be prolonged, despite our diplomatic efforts to resolve the issue. It is a very regrettable situation, but we have no choice but to prepare for all possibilities.
Moon's government has labelled the restrictions as vengeful retaliation for a Supreme Court ruling last year ordering some Japanese firms to pay compensation to Koreans forced into labour during Japan's colonial occupation of the peninsula. President Moon says his government will mobilise all resources, including tax breaks and financing, to ensure that in the long run, South Korea can produce its own high-tech materials.
There is a fair possibility that this will go into a long term.
In the short term, a global supply chain disruption is expected.
So there will be a large disruption in global supply of memory chips and displays, and it'll affect not only Korea, but United States, China, and Japan as well.
Could this trade dispute escalate further?
That's what Japan is threatening. They may decide to put more goods off the so-called white list, where you're on an expedited procedure to get these items from Japan.
Seoul says it's seeking an economic, not an emotional response. Though the dispute has sparked protests in South Korea amid public calls for a boycott of goods and tourism to Japan. Jack Barton, CGTN, Seoul.
BMW will begin building its new electric Mini at its British factory from late 2019, with the first vehicles reaching customers from spring next year. The chances of a no-deal Brexit has prompted the German automaker to move some of its engine production out of the country. Last year, BMW built over 230,000 cars in the UK, accounting for 15% of Britain's total automotive output. The automaker's latest electric version of its famous Mini car is said to be a tipping point, encouraging motorists to switch to electric vehicles. BMW's Southern English Oxford plant currently builds around 1,000 cars per day, with a new Mini rolling off the line every 67 seconds. And staying with the auto sector, China is determined to promote clean energy vehicles, including methanol and hydrogen-powered cars. But car makers acknowledge that there are many challenges to putting those vehicles on the road. CGTN's Wule has more.
More clean energy vehicles mean less air pollution. One of the latest examples is in China's northwestern city of Xi'an, where local officials say they have put 10,000 methanol-fueled taxis on the road, accounting for over 80% of the city's total number of taxis. And with technology advancements, China's Geely Group is now expanding to offer more methanol-fueled commercial vehicles.
China is rich in coal, while poor in petroleum. It is easier to produce methanol from coal, so methanol-fueled vehicles will be more popular in coal-rich areas.
Methanol is indeed a clean-burning fuel, but it's far more difficult to ignite than gasoline and burns about 60% slower. Experts say Chinese automakers need to greatly improve its efficiency.
Methanol is very corrosive, hard to combine with diesel, and difficult to be ignited by compression. But as long as automakers focus on how to make its compression ignition much easier, they will overcome the challenges.
So far, there are 9 automakers producing methanol-fueled vehicles in China, with over 30 different vehicle models on the road. After a 5-year trial, China started widely promoting the methanol-fueled vehicles nationwide in March. Experts say it shows the country's broader efforts to relieve environmental pollution and reduce its dependency on imported petroleum. And the hydrogen-powered vehicle is also known for its clean and environmentally friendly qualities. Many Chinese manufacturers have heavily invested in its research and development, but they say they need more related infrastructure to boost its expansion.
One of the biggest challenges is lack of basic facilities for adding, producing, and storing hydrogen, which needs more time to process.
Liu said their hydrogen-powered vehicles will first be deployed for public traffic and logistics, which rely on fixed routes and stable stations. With only dozens of hydrogen stations in China, experts say it will require more reform to lower the cost and promote the vehicles from public to private use. Wu Lei, CGTN, Hangzhou.
China's current auto downturn isn't deterring the market leader, Volkswagen, from its electric push and investing in more partnerships. Cheng Lei spoke to VW CEO Herbert Diess, who was in China recently to attend the World New Energy Vehicles Congress. Take a listen.
The Chinese market is slowing down. It might pick up in the second half, but mostly because of the low base effect. But Volkswagen is still doubling down on China, investing in mobility services in Anhui province, the software joint venture, and also, of course, your electric car push. Take us through the rationale behind that.
Yeah, we believe in the long-term future of this market. It's a market where still individual mobility has a high demand, will have a high demand. I think this country has the right policies in place with towards NEVs, which really is very important for us because we also believe in electric vehicles, and we have a very strong base here with our joint ventures, SAIC and FAW. So we feel very happy, and we are committed, and we are long-term oriented. We had quite a strong month of June now. We are gaining market share with most of our brands. So yes, we are going through difficult times, but we believe in a bright future.
Even though with the phasing out of subsidies, you're seeing a sharp drop in the growth and possibly sales.
We also agreed that the electric cars and NEVs will not come from alone. It requires policies. It's not always, let's say, government or tax incentives, but they require a specific support program to make it up to 50% market share. Many regions in the world are already heading towards that situation. By 2030, when you are 35 and we have 50% electric cars, I think most of the countries should be on a good track record to reduce their CO2 footprint in primary energy. And then the electric cars will be really the first choice in every place of the world.
China is also freeing up restrictions in the auto space for international investors. What are you going to do in terms of raising your stakes in your current joint ventures, starting new collaborations or equity investments in other companies?
We are in a crucial point now because we have to determine how to proceed from here on. We have now 3 joint ventures instead of 2, which we had for the last 35 years. Mostly. So it's time for dialogue, discuss, but we very much, I would say, we have a strong friendship with our FAW colleagues and SAIC colleagues. So we will find a way which suits all the 3 or the 4 parties now.
A lot of talk about what you're going to announce on July 11th at the board meeting on the Ford tie-up. Is it going to mean an equity investment in Argo? Is it going to mean wider collaboration?
We are very motivated by the dialogue with our Ford colleagues because, you know, we are big, but we have small volumes in some of the market segments. Light commercial vehicles is one of those. Combining forces with Ford brings us in a strategically much better role and position. And there are other areas where we are talking about. Autonomous driving in the United States, robotaxis is one area, and sharing the electric car platform.
The modern version of the iconic Volkswagen Beetle is set to cease production on Wednesday, but people in Coatepec, on the outskirts of Mexico City, still rely on the original model for daily life, praising it for its affordability and most of all for its dexterity at handling the district's steep streets. CGTN's Wang Xiaozhou has the details.
Affordability, repairability, and most of all, dexterity at handling steep streets are the top reasons why people here at Coatepec are so fond of the Beetle's original model.
Es para los cerros, patrón.
It's built for the hills. The new ones don't get uphill, and the old ones can climb any hill without problem. People trust them. We take customers safely to their destination. That is why the Beetle is so popular here.
David Alvarez drives a 2008 new Beetle with a roll-down top. Though he has owned older Beetles and admits his newer version isn't as ideal for hilly terrain, he likes the attention it draws.
I have gone out on the road, and honestly, the car has responded very well. And like anything, it needs tuning and adjustments. But the car has turned out to be very good.
For Mexico, the halt to Beetle production marks an end of an era. The old model compacts are popularly used as informal taxis for a place that lacks public transportation. There are concerns that Beetle mania may come to an end, as parts become increasingly hard to come by. There's no word on whether Volkswagen will bring back the Beetle in the future, but some analysts say, considering VW has done it once before, they don't see why it couldn't happen again, should the market demand it. Wang Xiaozhou, CGTN.
Let's look at the commodities market now, and oil prices rose about 2% today after industry data showed U.S. inventories fell more than expected, while major U.S. producers evacuated rigs in the Gulf of Mexico ahead of a storm. Gold, however, eased as the dollar climbed higher on expectations of a less dovish U.S. Federal Reserve ahead of a testimony from the chair, Jerome Powell. Coming up on the show. The Cape Town International Airport scores yet another award. And dozens of South African women discuss their challenges in the business world.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
The greatest journeys. The greatest sights. The greatest adventures.
Here in Canada, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival and hope.
So let's explore. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Another day, another accolade. That's the track record of Cape Town International Airport. Over the years, South Africa's second busiest airport has been showcasing its dominance in the world of travel, winning numerous aviation and tourism awards for airline excellence, as CGTN's Renee Delcam now explains.
It's been another winning year for Cape Town International Airport, which turns 26 years old this month. It recently won the prestigious World Travel Award for the third consecutive year and was also honoured with Skytrax World Travel Awards for the fourth year running, named Africa's leading airport and the 22nd best airport globally. Cape Town International Airport handles around 11 million passengers every year, and it attributes its success to its people, the airport community on the ground here in Cape Town, South Africa's mother city.
We're blessed with a wonderful team, a team that is focused, that is committed, that is competent, that understands the environment and that's able to respond to the customer. As much as we have beautiful airports, bricks, mortar, it's not the secret ingredient, it is the people at the end of the day. And not just airports company, but all the players on the airport, the airlines, the service providers, the government agencies, everyone making a difference every day.
Cape Town International prides itself on its punctuality, with over 85% of its flights taking off or landing on time. And the entire team agrees it's all about service excellence and the safety and comfort of its passengers.
I think we are successful because we are a welcoming airport. We welcome different nations every single day.
Passengers, that's my passion. So trying to help, making sure that everything runs smooth from the beginning till the end. That's just what we need to do at the airport.
People come first, our passengers come first. Whatever the needs are, we are there to meet their needs in whatever you want or what you want to do. And at Cape Town International Airport, we'd like to throw out the red carpet for you.
Cape Town International Airport says it will continue growing with new runway and terminal projects as part of a major investment and expansion program over the next 5 years.
A day like today, which is very typical, we probably process anything between 40,000 passengers. We do almost 300 flights for the day. So certainly the airport is becoming bigger, it's becoming more complex, and it's part of the growth trajectory. Again, the team that is here, I have every confidence that they have the ability and the passion to take us into the future.
Renee Delcam, CGTN, Cape Town, South Africa.
Womenomics Africa is getting females around the table to open up about the hurdles they face in the business world. Dozens of women attended its 2019 masterclass in Johannesburg. It comes as the continent signed a historic pact opening up trade among African countries. CGTN's Julie Shire has more.
The historic African Free Trade Pact was launched this week, creating the world's biggest economic bloc.
Women who have long been sidelined also want a piece of the pie. South African business movement Womenomics Africa is helping them to do so.
Womenomics of Africa is really taking a conversation about economics and making sure that women are at the heart. So when we start talking about this whole notion of the African Continental Free Trade Agreement, and we start talking about the growth in GDP, the growth in revenue and in sales and in trade, we can actually sit back and say we can attribute this value to women.
Women account for more than half of the population, but men still dominate proceedings in government, in the boardroom and in trade.
It is crucial for us to galvanize our strength and energies and be broadened in the opportunities that we can explore. It is okay for us to have our businesses in the hospitality industry and tourism, but it is equally important for us to be able to be included in the value chain.
It's about creating education and providing information to women to ensure that we're able to bring them into the space. How do you get them to understand which markets, what sectors, where the access actually lies, who do they need to speak to? That's why such events are so important.
Women are now gearing up to capitalize on trade opportunities. Intra-African trade stands at just 17%.
So across all the sectors, from agriculture to mining to oil and gas to services to the financial sector, the opportunities are immense for women to participate. And I think, unfortunately, until most recently, we have left women at the periphery. And that's beginning to change. And I think the more and more women are involved, the better it's going to get.
Womenomics is taking its conversations on the road. It will soon be traveling to Namibia, Ghana, and other parts of the continent, helping businesswomen connect and grow. Julie Shire, CGTN, Johannesburg, South Africa. Let's now look at the currencies. The Kenyan shilling held steady against the dollar today, with inflows from diaspora remittances and offshore investors buying government debt, easing pressure from excess liquidity in the money market. And with that, we call it a day here on Global Business, but we invite your feedback, send it to the contacts on the screen and follow us on our digital media platform. I'm Peninah Karibe. Thank you for watching.